Hey, Puppy Trades! Uh, I'm worried. I'm worried and I'm scared because my largest holding in one of my accounts is MSTY, and MSTY sells out of the money synthetic covered calls on MicroStrategy, which is great because MicroStrategy pays massive covered call premiums due to the volatility. But the flip side of that is because of the volatility, holding MSTY is not a free lunch. And MicroStrategy reports earnings tomorrow. So, unlike Coinbase, Coinbase has fiat. So, I can hedge Coinbase directly, CONY. I can hedge that with fiat. But I can't do that with MicroStrategy because there's no inverse MicroStrategy Yield Max ETF. But there are leveraged inverse MicroStrategy ETFs. And so ChatGPT has really helped me out with this quandary. So I'm going to show you guys how I train ChatGPT and how ChatGPT is actually going to help me initiate a position for tomorrow and even tell me how long to hold it. Remember, MSTY is going to pay a dividend next week. That ex dividend date is on Wednesday and next Wednesday, and earnings are tomorrow after the bell. So I'm going to initiate this position tomorrow, and we're going to show how ChatGPT helped me initiate this position, which I will take tomorrow. No, partially with my buying power. 50% of my buying power is going to go into this ETF, these ETFs tomorrow. And so it's important to know I currently hold MSTY and I hedge it with SBIT. But for earnings, there are MicroStrategy specific risk that I have to worry about. Okay. And I don't want to wake up and find out MicroStrategy is down 25% and Bitcoin is only down 5%. That would be very bad for me. So we're going to go through this right now. First things first, Google SMST ETF and MSTY ETF. It said I couldn't find any information on an ETF with the ticker SMST. It's possible there might be a typographical error or misrepresentation, blah, blah, blah. But it had MSTY. It said what MSTY was. So I said SMST shorts MicroStrategy 2 times from Defiance. It said the Defiance daily target 2x short MSTR ETF is an exchange traded fund designed to provide investors with twice the inverse of the daily performance of MicroStrategy Incorporated stock. This means if MSTR's stock price decreases in value by 1% on a given day, SMST aims to increase in approximately 2% and vice versa. So it showed the objectives, showed the assets under management, the net asset value, and the expense ratio. So I said 30% SMST and 70% MSTY to hedge MSTY earnings. It said your idea of using 30% SMST and 70% MSTY allocation as a hedge for earnings is interesting. Here's how it might work in practice. Potential hedge mechanics: MSTY generates income by selling covered calls on MicroStrategy. It benefits from high volatility and sideways movement, but loses upside beyond the covered call strike price. SMST provides a negative 200% daily return on MSTR. It profits when MSTR drops, making it a hedge against MSTR's downside. By holding 30% SMST and 70% MSTY, you're essentially gaining MSTY's covered call income while hedging MSTR downside and creating a delta neutral or mildly bullish position depending on rebalance frequency and MSTR's price movement. So here's the idea. It recommended that I buy puts on MSTR. I short MSTR directly, but I'm not going to do any of that because this account doesn't use options and it doesn't short. It doesn't use any margin at all. So I wanted to fine tune my approach. It said define my hedge objective, and it actually said if I wanted to partially I wanted partial downside protection while keeping some upside. A lower SMST allocation between 20 to 30% may work. Now, I just want to hedge earnings. So it said estimate MSTY's delta exposure, and it gave me a very cool delta exposure. It said a rough estimate for MSTY's delta might be around 0.6 to 0.8 per dollar move in MSTR, less than 1 due to covered call caps. So I want to hedge that 0.6 to 0.8 delta, and so 30% SMST is right in the middle of that. So it gave me some tips. And then I said, should I worry about SMST going to zero because of the collapse of the swap market, or other leveraged ETF only hold this for one-day disclaimers? And it said yes. There are valid concerns when holding SMST long-term due to swap risk, leverage decay, and ETF structure mechanics. Here's what you could consider. It said, what I should consider, SMST achieves its negative 2x leverage MSTR exposure, holding total return swaps using counterparties, big banks, or financial institutions. If the swap counterparties default or refuse to roll over the swaps, SMST could fail. And this is something that has happened before, where leveraged ETFs have gone bust because of the swap market. Now, it said there's a low risk of that, and that's why I recommended to use put options or short MSTR directly. But then it said something very interesting. Dynamic SMST usage. Use SMST tactically instead of always holding it. Entering SMST when MSTR is overbought, for example, and exit when MSTR is weak. So I said, what if I just buy 70% MSTY and 30% SMST to hedge for the month of earnings and initiate the position the day before earnings while holding a larger position of MSTY during other months that is completely separate and unhedged? That's a much more practical and efficient approach. Here's why. Why hedging only during earnings makes sense. Earnings events equal volatility. MSTR tends to have big moves during earnings. MSTY's income versus MSTR's moves. MSTY collects option premium, but if MSTR tanks, the ETF could drop significantly. SMST as a temporary hedge. So the idea here is that I'm usually using MSTY and I'm hedging it with SBIT. But for the month of earnings, I'm worried about MicroStrategy specific risk. What if MicroStrategy misses and MicroStrategy is down 25%, but Bitcoin is only down 5%? In that case, my hedge on SBIT wouldn't be enough. So it said your strategy, how it works is non-earnings period, hold 100% MSTY, which I'm going to use about a 15% allocation to SBIT to hedge MSTY and other Bitcoin related covered call ETFs like YBTC. And then the pre-earnings adjustment, shift to 70% MSTY and 30% SMST to hedge against MSTR the day before earnings. So the benefits of this approach, it reduces the SMST decay risk. Since I only hold SMST for a few days, I avoid long-term compounding losses. Maximizing MSTY yield, by holding unhedged MSTY during non-earning months, you collect higher income. Efficient hedging, only deploy SMST when MSTR is most volatile. Earnings events means that I'm exactly hedging when needed. Fine-tuning the ratio, it said go more defensive, 60% MSTY or 40% SMST, and if MSTR seems bullish, use a lighter hedge, 80% MSTY to 20% SMST. So what I think I'm going to do is tomorrow I'm going to enter a position that is 40% SMST to hedge my MSTY, and I'm going to buy 60% MSTY to collect that massive dividends before earnings. I currently use SBIT to hedge MSTY, but I want to have MicroStrategy specific risk for at least earnings. So I'm going to enter 40% SMST and 60% MSTY to hedge before earnings. Let me know if you think this is going to work in the comments below, and have a great day.